So Nike rallies after Bank of America says product innovation will boost shares. Nike's tracked higher in early trading on Thursday after Bank of America upgraded the athletic apparel stock to a buy rating after having it set at a neutral. Okay, so they're going bullish now. This analyst, Hutchinson, said consensus estimates for Nike finally look achievable. Quote, Nike is taking bold steps to transform, and the stock sits at a 10-year trough relative PE, she highlighted. 100%. The thing that's so beautiful about Nike is it's such a safe corporation to invest in, one, right? And two, when you're investing at this sort of valuation, it just is overwhelmingly attractive as a buy, which explains why I bought this stock 7 straight weeks now at this point in time, right? Hutchinson, and I probably will buy it 8 straight weeks and 9 and 10 and 11. Hutchinson expects Nike to ramp up innovation ahead of the Olympics, which the Olympics are this summer, and its Investor Day event, which will happen for the first time in 7 years this fall. The event is seen generating demand and excitement around the company's products. Bank of America said modeling accelerating demand creation spending for Nike to generate excitement over its new products. Nike is also noted by Bank of America to be undergoing a broad restructuring, which is expected to pay off on the bottom line over the next 2 years. Boom, that's the huge point with Nike. Outside of the great brand, outside of where the stock's trading at compared to where it usually trades at, right? The other huge thing here is this restructuring we're talking about $2 billion of cost savings. That's all going to hit the bottom line. And Nike's fiscal year ends in May, so you're really going to start to see that come in fiscal year 25, which once again starts after May, and in future years as well. So that's another part that just makes this Nike case so dang attractive. Seeking Alpha analyst Grant issued a buy call on Nike earlier this month, expects Nike's brand to see a resurgence in strength by the end of 2024 or the beginning of 2025. So obviously the stock is up on the back of this news, and I remain very, very excited about Nike. It's just easy money. I just love it when I can buy stock and it's easy, right? Some stocks I buy sometimes and it's like, they might have insane upside potential, but they're a little risky, right? And, there's that excitement of like, wow, this could be a 5x, 10x, 20x opportunity. That's not Nike. But Nike's just like, I'm investing in that. It's easy money. I'm going to make dividend money off that. I'm going to make nice share appreciation over the coming years. Easy, easy, easy. So some of those stocks are just beautiful to have in your portfolio. Celsius, Starbucks, McDonald's, and Elf Beauty stand out in a survey of teenagers. Piper Sandler released its 47th annual Taking Stock with Teens survey on Tuesday. In footwear, Nike remained the overall favorite footwear brand, but the company's mind share from a year ago as New Balance made a big jump. New Balance? I don't know if that's lasting, but whatever. Nike's Converse brand had lost the most footwear mind share over the last year. Decker's Hoka brand and On Running also gained market share. It doesn't surprise me at all. Those brands have been really hot last, I would say, couple years here. We'll see if they remain hot over the next 5-10 years. It's a long-term gain, right? In cosmetics and beauty, Elf widened its dominant position with teenagers, while Sephora outperformed Ulta Beauty. Beauty consumers still prefer to shop in-store versus online. Piper Sandler survey. I think that's important. It's surprising. Like some people still like to shop for certain items in a store versus online. And beauty consumers are one of those. I think shoe consumers would be another one, right? A lot of people like to try on the shoes, buy them at an actual store rather than online. Notably, Target improved its standing with teenagers in the survey. I'm not surprised at all in regards to that, right? And Target could be stealing a little bit of market share here and there from Ulta. You never know, right? Especially after what Ulta said here recently. Now, great, obviously, to see Elf. It doesn't surprise me at all, no, because Elf's the most successful by a large margin when it comes to cosmetics category on, TikTok, Instagram, all the big social platforms, so it doesn't come as a surprise at all. There was a notable shakeup in the restaurant preference ranking of teenagers. Chick-fil-A remained the favorite restaurant at 16% share, but McDonald's jumped to number 2 spot, and Chipotle slotted in the 3rd favorite restaurant pick. Raising Cane's also ranked much higher than a year ago. Yeah, Raising Cane's, if that was across the nation, believe me, Raising Cane's will probably be number 1 overall then when it comes to teenagers. So interesting. By the way, let me just tell everybody why this is important. You might say, teenagers, who cares about what teenagers? Teenagers don't have any money, right? Who cares? Here's why. Here's why Wall Street pays attention to this. So here's why they do the surveys. They do this because, okay, you're 17, 16, 18 years old. You're about to go into likely college, right? Graduate, get your job, start making more money, obviously, and spending money. And you enter, the workforce, and boom, you become a consumer, right? And so the thought process is you want to try to get people to love your brand, kids to love your brand as teenagers, and then hopefully once they get to their money in their 20s and 30s, they're loyal to your brand. So let's say in Elf Cosmetics, for instance, right? You attract them as, somebody that's, 15, 16, 17 years old. And hopefully when they go to college, they're going to be using your product. And then when they graduate from college and they enter the workforce, they're going to be using your product, right? And the same thing goes for all those brands, right? And so that's why it's important. Do teenagers have a lot of money? No, we know that. It's not about necessarily them spending right now. It's more about what they're going to be spending in the future, making sure they like your brand, they're in your ecosystem, those sorts of things, okay? In snacking, Campbell's Soup, Goldfish topped the list. Interesting, okay. I think that's number one amongst maybe 2-year-olds, but okay, teenagers as well. Followed by PepsiCo's, Lay's, and Kellogg's Cheez-It. Cheez-Its? Teenagers like Cheez-Its? I thought only my mom liked Cheez-Its. That's wild. Celsius was one of the biggest standouts in the teenager survey. At 17%, cited the Celsius brand as their favorite energy drink brand versus 12% market share. Monster and Red Bull both under-indexed with teenagers in comparison to their total market share, so not great for those two brands, obviously, right? Very good news in regards to Celsius, and does it come as a surprise? No. I mean, Celsius has just been... They've been outflanking Monster and Red Bull, and then obviously all the other energy drink brands, but it's just Monster and Red Bull is the main competitive threat. So Celsius doing a heck of a job, and obviously it pays in their stock price. They're one of the few stocks that's outperformed Elf over the last 5 years. Very few. That's really the only stock I can think of that's outperformed Elf in the last 5 years. Starbucks and Bath & Body Works also have dominant market share positions, mind share with teenagers. Our survey results indicate a slight increase in teens spending sequentially from fall of 2023, but self-reported spend is down 6% year over year, well below pre-Rona levels. We are seeing some significant shifts in brand preferences, including the rise of smaller, innovative brands, which are taking share from incumbents. We think social media has led to an accelerated trend cycle, including an increased emphasis on key products and brands that will have to be nimble to keep up. Yeah, and a lot of brands just aren't very nimble, so they can't keep up, especially with companies like the Elves, right? So, interesting about spending there. And if we think about... And I'm looking forward to getting a Sofi, Amazon, Apple here. But if we think about, like I'm trying to think back to when I was, let's say 17, 18 years old. What were my biggest expenses back in those days? My biggest expenses were gas for my car, because I drove this old car that is a 1977 and got less than 10 miles a gallon. My other big expense was my cell phone bill. And my other big expense from what I remember back then was car insurance. Now, if we think about some of those categories, we have definitely seen some major inflation in some of those categories, right? Car insurance, I mean, that was the hottest thing by far and away in the CPI numbers yesterday, right? So 17, 18-year-olds, I'm sure it's not fun to pay car insurance rates right now if you have to come out with that out of pocket, right? And then if we think about gas prices, pretty dang high right now. So that's something that's negatively affecting out there. So yeah, I could see that. And then, back in my day, we used to get cell phones for free, because back in those days, it was like the flip phone days, right? So you didn't even have to worry about spending $1,000 on an iPhone or whatever. The cell phone bill is more expensive than it was back in my day, but, it's not like it's an insane amount more. But compared to getting a free phone versus, now you buy a $1,000 phone is, that's a pretty big expense as well. So I understand, why teen spending might be down with inflation going on, right? Citi resumes SoFi coverage at buy after model update financing actions. Citi resumed coverage of SoFi with a buy high-risk rating. Interesting way of putting that. Okay, a buy high-risk rating, as this analyst takes into account the lender's recent financing actions that are expected to save $40 million, $60 million in annual interest expense and dividend payments. Love it. Love it. SoFi exchanged $600 million of its 0% convertible senior notes due 2026 for 73 million shares, which should benefit the total risk-based capital ratio and add Q1 generally accepted accounting principles income. It should add to it. So that's good. The analyst said also it issued 1.25% convertible senior notes due 2029 and entered into capped call transactions. Quote, our fundamental bullish view on SoFi remains unchanged, especially as its intended business's diversification comes into focus. Its ability to continue to attract deposits, continue to prove itself out, and investors focus on the forward profitability, he wrote to clients. Yeah, I think SoFi is doing a great job attracting a lot of new customers, right? Their savings account product is attracting a lot of people. It's really trying to get people in the ecosystem of direct deposit and then getting that rate. And then their personal loans are really attracting a lot of customers, in my opinion, as well. The Citi analyst expects SoFi to continue tightening personal loan underwriting until delinquency rates improve. Good. Possibly in the second half of 2024. He estimates 6% origination growth in 2025. He sees student loan refinancing originating ticking up late this year as a 12-month on-ramp that the government implemented when restating a student loan payment expires. Yes, that's still coming. I mean, when you think about student loans, some people have started repaying them, but others are still actually not paying them right now, which is fascinating. It's the whole situation. His model's estimates for end of period loan balances calculates growth of 9% for both 2024 and 2025, assuming relatively stable payment rates and higher loan sales activities. We increase our net interest margin expectations for the next 2 years as we anticipate the company will continue to replace higher cost funding with lower cost deposits. He also sees higher financial services segment revenue reflecting strong trends in credit, fast-growing payment network fees. So, I mean, my opinion on SoFi, obviously you guys know it's a relatively new stock I've been buying, right? My opinion on SoFi is I think it has an extremely attractive risk-reward profile, especially at $7. Here's the deal, okay? If we ever have a big unemployment, nasty recession, it's going to hurt SoFi, right? That's true for all banks. So it's just a risk you have to be willing to take, right? In regards to these. Now, if you don't, I think SoFi is looking great. It's looking really, really great. They have such a wide range of products now. They're really, Anthony Noto really has that team running on a high level in terms of understanding how to steal away future customers. We spoke about teenagers earlier in this video, right? And I just think SoFi is a very attractive product for teenagers or those people that are getting their first bank accounts, much more so than traditionally a Wells Fargo was. Or I remember going down to the bank when I was a teenager with my mom, and we set up my bank account, right, with direct deposit. When I got my first official job at Einstein Bagels cleaning dishes. I remember that, right? And I just think SoFi is really attracting the people that were me, 15, 16, 17 years ago. And they're doing that now. And I think they're going to continue to do that over this next 5-10 years. And I think a company like SoFi relates a lot better to the younger consumer than some of these older traditional banks do. So, yeah, I think that really bodes well for SoFi's next many years in front of it, right? I do think SoFi is also, and not many people ever talk about this, and I'm not sure why, because it's very common in this industry. I think SoFi is a very attractive takeout target in terms of a buyout candidate. So meaning a big bank buying a company like SoFi and really getting that digital experience. Now, would Noto, the board of directors, and shareholders want to sell the company? I don't think so. But if I was a big bank, right, and I don't have a big digital presence like that, and I'm kind of old school, a lot of locations, I would look at a SoFi, try to buy out SoFi, even if I've got to pay double the price, even if I got to pay $14 a share, $15 a share. I think it's a very attractive opportunity when you look at what's going on there. So now for SoFi shareholders, I hope that doesn't happen because, I think a lot of the SoFi shareholders want a whole lot more than $14 or $15 for this company over time. So that's a little food for thought in regards to that. But there's no doubt that it'd be, why wouldn't you try to buy it if you're a Wells Fargo or Bank of America, right? You're just getting such a differentiated product mix. Man, I don't know. I think it's a really attractive. And in the banking industry, banks buy banks all the time. Big banks buy little banks. I don't know, man. We'll see. Palantir. Palantir's had a decent year so far, up 37%. I think that's a little better than decent. I mean, if you can get 37% a year on a stock, you've found a winner, chicken dinner. But yeah, 30%, 7% so far this year. Palantir, what a time to be cash loaded, right? What a time. I mean, you think about one of the best times in the past 20 plus years to be cash loaded. It's right now. When interest rates, you can get this sort of money on treasuries, and Palantir is able to generate that money and with no debt. I mean, tremendous. And then you think about, Palantir is really, they either got insanely lucky. This is the way you got to view Palantir. It's either one of the luckiest companies in the world, or they really do have a mad scientist genius running this company. It's one of those two. I don't care which take you have on it, but you can't have any other take other than this mad scientist genius running the company, or they're just the luckiest freaking people in the world. Because you think about it, they went into this whole situation cash loaded with no debt. In one of the best times in history to be cash loaded with no debt, when all of a sudden interest rates went to the moon, right? On top of that, the company has been focused for the past 10, 20 years on building a product that is so great that's at the cross sections of data and artificial intelligence. And now we're in this massive AI wave where every company out there is looking for AI related solutions to improve their businesses. And there's just Palantir here with this perfect product, right? And with everything they have from AIP to Foundry, Gotham, Apollo, all their products, it's just so well positioned. And so you got to ask yourself, and then the third thing is, CARP years ago told us about the world we were about to move into, which was going to be much more conflict, much more geopolitical problems, going to move into a much more dangerous world. He told us this years ago, and everything he said came true. So, I take you back. Is Palantir the luckiest company in the world and everything just happens to work out for them and just everything? Or do they actually have a mad scientist genius running the company? Ask yourself that, right? Because there's no in between here, folks. There's no in between. I'm going to go with they might have a mad scientist genius running the company, because I don't think all these things all working out happens to just be by luck or by coincidence. I think there's some stuff there, okay? And so that's Palantir. And it also, by the way, pays very handsomely when, you're one of the most trusted companies in the world by the U.S. government, because you probably know a lot of stuff that a lot of other people don't know, even a lot of politicians. NVIDIA, come on, man. It's a must-own stock. It's a must-own stock. This dip here, give me a break. That's just some short-term traders trading in and out of the stock. At the end of the day, everybody's going to want to own this. Until NVIDIA's growth rates break, and when I say break, I'm talking about such a big deceleration in growth that people really get scared. Until that happens with NVIDIA, the stock's going to keep rolling. It's going to be 1,000 plus before you know it, and then people are going to be paying 1,500 for the stock. And then they're going to be having a conversation about, man, maybe NVIDIA wasn't that expensive when it was 800. But here's the deal, 37 forward PE? We really haven't seen anybody to really compete with NVIDIA's chips yet. A lot of these other players try to show off this and that. At the end of the day, there's still no one really competing with NVIDIA's chips. And until we see that, also, it's a hard one not to be very, very excited about. It really is. So in regards to NVIDIA, it's positioned great for this AI wave. And when does this end? Who knows?